Hi everyone, welcome to today's video. Today we are going to get a clear understanding about discounts. So let's get into the video.
Discount is a kind of a reduction that you are getting when you are purchasing something, or it is a kind of a reduction that you are giving when you are selling something for your customers. So let's take an example. I am telling you there is a certain product, the value of the product is $100. And they are telling when you purchase this product you will get a 10% discount. So $100, 10%, how much is that? You are getting a discount of $10. So here see, from the $100, once you deduct the $10, the value that you are getting is $90. So the discount that you received was, in this particular example, how much is that? $10. So discount is some kind of reduction that you are getting when you are purchasing something, and when you are selling something you will give discount for your customers. If you take discounts, there are two types of discounts that we will be focusing on. What are the two types of discounts? One type is there is something called trade discount, and there is something called cash discount.
Now let's learn about the trade discount.
Trade discount is a discount which is given at the point of sales as a reduction from the normal selling price or the list price. We will call it as catalog price also. So what is this trade discount? Trade discount is a reduction that we will be getting at the time of purchase, or it is something that we will be giving for our customers at the point of sales. So let me take an example for this for you all to get a better understanding. Let's assume this is a table. The value of the table, they have priced it as $100, and with that they have attached a small tag saying that 10% discount. So if you take this $100, what is that $100? It is the list price of that particular table. If not, we will call it as the normal selling price, or we will call it as the catalog price also. So list price is how much? $100, and they are telling you will get a 10% discount when you purchase this table. So this discount is how much? It is 10%. 10% means $10 reduction. So the final price that you will have to pay, how much is that? $90. So the discount that you received here, we will call this one as a trade discount. So when you are getting this discount at the time of purchase, when you are purchasing that particular table, you are getting this discount. You will understand the difference between trade discount and the cash discount once we are done with the cash discount part. For the time being, let's get the proper learning about the trade discount, then we'll get the learning about the cash discount. So simply what you have to remember, trade discount means it is a discount that you are getting at the time of purchase, or when you are selling something at the time of sale, if you are making some reduction from the list price, if not from the catalog price, the reduction that you are making or that you are getting, we will call it as discount. Trade discount actually. So if you take the trade discount, there are two types of discounts that you should know. One is discount received. So discount received means what? You can understand when you are purchasing something, when you are purchasing some item, your supplier will give you some discount, right? So that is discount received. And you should know how to account for trade discount given also. Sometimes what you will do when you are selling your product to your customers, you will give discount. So when you are selling, you will give discount for your customers. So that is trade discount given. For us to get a better understanding about this trade discount and how to account for trade discount, let's do certain questions. So in this question I have given XYZ Limited purchased goods. List price is how much? $40,000. Received a trade discount of 20%. So I am going to purchase some item from XYZ. XYZ is the company, my company. I am purchasing some goods for how much? $40,000. So the list price is how much? 40,000. From that, I am getting a discount of how much? 20%. So at the time of purchase only I am getting this discount. So this is a trade discount that I am getting. Discount is how much I am getting? It is 20%. So 40,000, 20%, how much is the value that I am getting? 8,000 reduction. After the trade discount reduction, how much is the value that I will have to pay to that particular supplier? It is 32,000 US dollars. So when it's come to the journal entries, what you have to remember, in our accounts we will be recording only this 32,000. The list price will not be recorded, and this trade discount also will not be recorded. What we will be recording from the list price, once you deduct your trade discount, the price that you are getting, the value that you are getting, that value only we will be recording in our account. So keep in your mind, when it's come to the trade discount amounts are never recorded in the accounts. So what's the double entry for this 32,000 purchase? Purchase is an expense. Expense increases, it's a debit record. So what expense is that? Purchase expense. How much is that? 32,000 US dollars. And from other end, what will happen here? See, you are purchasing goods, okay, by giving how much? 32,000. So here they are not telling this is a credit purchase, so you can take it as a cash purchase. So here one of your asset is decreasing. Which asset is decreasing? Asset decreases, it's a credit record. Cash asset is decreasing by how much? 32,000 US dollars. So this is how you can account for the trade discount. So for y'all to get a better understanding of this, let's do another question. XYZ purchase goods on credit. This time we are purchasing goods on credit. The list price is how much? 50,000, and received a trade discount of how much? 10%. So our list price is how much? It is 50,000. Out of that I am getting a trade discount. How much is the trade discount that we are getting? It is 10%. 10% means 5,000 reduction. So how much is the amount that I will have to pay after the discount that I received? It is 45,000 US dollars. So I said you, list price will not be recorded in the accounts. Trade discount will not be recorded from the list price. Once you deduct the trade discount, the amount that you are getting, that amount only will be recorded in your accounts. So what's the double entry for this? Your debit record will be your purchase, because purchase is an expense. How much is that? 45,000 US dollars. Expense increases, it's a debit record. And we are purchasing these goods on credit. So if we purchase on credit, what will happen? Our liabilities will increase. So liability increases, it's a credit record. So it is trade payable liability. Trade payable liability is increasing by how much? 45,000 US dollars. Why it is 45,000? Yes, price of the product is 50,000, but from that we got a discount of 5,000, trade discount of 5,000. So my liability towards to that particular supply, it is only 45,000 US dollars. Now let's do this question. In the month of June, XYZ sold 20 tables and gave a trade discount of 5%. This time we have given some trade discount of 5%. Each table has a list price of $100. So list price is how much? Each table's list price is $100. I sold how many tables? 20 tables. So here how much is the value that I am getting? It is $2,000. But here see, I have given a discount of how much? 5%. I have given a trade discount of how much? 5%. So how much is the 5% trade discount? It is $100 reduction. So after the trade discount, what's the value? It is $1,900. So I said you, in accounts we are not recording the list price, we are not recording the trade discount, we are recording the amount which is after the trade discount. So we have to record this 1,900. So here I am selling something. So I sold tables. By selling tables, I will get I got a cash of how much? $1,900. $2,000 is the amount that ideally I should get, but $100 is a discount that I gave. So I got a cash of how much? $1,900. So cash is an asset. Asset increases, it's a debit record. Which asset is increasing? Cash asset is increasing by how much? $1,900. And it is a sale for me. Sale is an income. Income increases, it's a credit record. Which income? It's a sale income. How much is that? $1,900. So I hope you got a very good understanding of how to record the double entries for the trade discount. So when it's come to the trade discount, you will give discount and you will get discount. You will give discount when you are selling something, and you will get discount when you are purchasing something. Trade discount is a discount that you will get at the point of purchase, or that you will give at the point of sale. From the list price or from the catalog price, it's a reduction that is happening. So that discount is trade discount.
Now let's learn about the cash discount.
Cash discount is a discount which is given at the point of settlement of debt. So if you take the cash discount, there is another name that we are using for the cash discount. We will call it as settlement discount also. When it's come to the cash discount, there are two types that you should know. One is discount given. Discount given, the accounting term that we are using, it is discount allowed. That means sometimes what you will do, you will give discount for your customers when they are making the cash payments to you. And there is another cash discount which is discount received. That means when you are settling your suppliers, they will give you some discount. So for y'all to get a better understanding of this cash discount, let's do certain set of questions. I am pretty sure once we are done with this set of questions, you will be perfectly okay with the trade discount separately and cash discount separately. XYZ Limited purchased some goods, $50,000 on credit basis. When settling the amount, received a cash discount of 10%. So let me show the journal entries for this particular transaction. First of all, I'll show the journal entry for the purchase of goods. Purchase journal entries. I am purchasing goods for $50,000. So it's an expense. Purchases is an expense. So expense increases, it's a debit record. Purchase debit $50,000. And I am purchasing these goods on credit. So if I purchase on credit, my liability will increase. Liability increases, it's a credit record. So what liability? Trade payable liability. How much is the trade payable liability? It is $50,000. Okay. What the supplier is doing, when I am making the settlement for this particular supplier, he gave me a cash discount of 10%. So I said you, cash discount you will get at the time of settlement. So I am going to settle this supplier. I am going to make the payment for this particular supplier. When I am going to make the payment for this particular supplier, supplier is reducing 10% from the amount that I should pay to him. So how much he is reducing? 50,000 is the amount that I should pay him. From that, he is giving me a 10% reduction. So how much is the reduction that he is giving to me? 5,000 reduction that he is giving to me. So 50,000 is the amount that I should pay him. He is making a reduction of 5,000. So how much is the amount now I should pay him? Only 45,000. So I will pay him that 45,000. So second one, the settlement double entry, I will show it to you. Settlement one. So I am going to make a cash payment. Cash payment means my asset is decreasing. Asset decreases, it's a credit record. Cash asset is decreasing by how much? It is decreasing by $45,000. And what you have to understand here, I am settling my supplier, right? So I am settling my supplier by paying 45,000, and that supplier gave me a 5% discount, 10% discount, which is 5,000. So in total, that entire amount 50,000 will be settled. That means my entire liability will be settled. Entire liability amount get decreased. Liability decreases. It's a debit record. Which liability is decreasing? Trade payable liability, decreasing by how much? $50,000. Why it is $50,000? He gave me a discount of 5,000 when I am giving the cash. So I gave 45,000. In total, my liability got reduced by how much? 50,000. And what you have to understand, whatever the cash discounts that we are getting, we will record that one as an income. We will consider that one as an income. So here the discount that I received, cash discount that I received, we will consider that one as an income. So income increases, it's a what record? It's a credit record. What income is that? Cash discount received income. How much is that income? Income increases, it's a credit record, $5,000. So if you take the trade payable account here, see, if I put the trade payable double entries into the T account, here trade payable value is $50,000, okay, for the purchase. Then I am settling $45,000, 45,000, cash is getting decreased, and I am getting an income of how much? $5,000, a reduction actually. Discount received income. So my trade payable account will get balanced. How much is that? For $50,000. So that account is totally balanced. So from this question, what's the learning that you have to get? One learning is cash discount you will get only for the credit purchases. By giving cash, if you purchase some item, you will not get any cash discount. Cash discount when you are getting at the time of settlement, that means if you get some credit period from your supplier, after some number of days when you are going to make the settlement for that particular supplier, at that time only the supplier will give you some reduction. So keep in your mind, very important thing that you have to remember, cash discount will be received only for the credit purchases. Cash discount will be received only for the credit purchases, not for the cash purchases. And whatever the cash discount that you are getting, we will consider that one as an income. So these are the very two important points that you have to remember when it's come to this particular question. So for y'all to get a better understanding of this, let's do another question. XYZ sold goods on credit for $60,000. This time we are selling goods on credit. Now here see, this time also we are selling for what? On credit. Previously we purchased on credit. Now here we are selling on credit. So what you have to remember, cash discount is something which is connected with credit purchases and credit sales. So don't forget that, that is very important. And allowed a cash discount of 10% at the time of settlement. So let's record the double entries for this. So first of all, let me record the double entry for our credit sales, double entry. So credit sales, it is a debit record for your trade receivable because it's on credit. It's going to be a trade receivable for you. Trade receivable, how much is that? $60,000. And credit record is going to be there for your sales. How much is that? $60,000. Now let's see at the time of settlement. At the time of settlement from your customer to you, how is the double entries are going to be? So customer is going to give you 60,000 cash. At the time of settlement of the cash, you are giving a 10% discount, which is 6,000 reduction. So customer is giving you only $54,000. So customer is giving you only $54,000. That means asset increases, it's a debit record. Which asset is increasing? Cash asset, which is $54,000. And your credit record is going to be what? Your credit record is going to be your entire trade receivable amount is going to get reduced from how much it is $60,000. It is going to get reduced from $60,000. So I'll write it here. Your asset is decreasing. Which asset is going to decrease? Your trade receivable asset is going to get decreased by $60,000. Okay. And what you have to understand, whatever the discount or the cash discount given, or we'll call it as allowed, cash discount allowed, we will record or we will consider those things as expense. So here expense is increasing. What expense is increasing? Your cash discount allowed. Cash discount allowed expense is increasing by how much? $6,000. So your debit side is 60,000, credit side is 60,000. So your entire trade receivable amount also will get settled. Why is that? You gave him a discount of 6,000, from that 6,000 got reduced and he gave you cash 54,000. So the remaining 54,000 also will get reduced. So from that entire 60,000 trade receivable amount will get settled. So from this question, what's the learning that you have to get? Whatever the cash discount allowed or cash discount given, it is something connected with the credit sales, and we will consider whatever the cash discount that we allowed, it is as an expense. We will consider those things as expense. So for you all to get a better understanding of trade discount and cash discount, let's do another question. A company purchased goods for $10,000 less trade discount of 10%. So here in this question you have a trade discount also. How much is that? 10%. These goods were bought on credit. So these goods were bought on credit. Very good question. Company received another discount of 5% when paying the cash to the creditors. So when we are making the payments to our suppliers, we got another 5% cash discount. Now let's see how to record the double entries for this particular question. So first of all, we have to understand what is the price of this particular product after the trade discount. So the list price of this product is how much? List price or catalog price. List price of this particular product is $10,000. From that you are getting a trade discount of how much? 10%. So 10%, what discount is that? Trade discount. Trade discount 10%, that means $1,000 reduction. So after the trade discount you have value how much? $9,000. So I said you this list price we are not recording in the accounts, and this trade discount also we are not recording in the accounts. In the accounts we are recording the value which is after the trade discount, which is this $9,000 value. So this 9,000 is the value actually of the purchase value. Actually this is the purchase value. So let's record the double entry for your purchases. Purchase. How much is the purchase expense? Expense increases. Which expense? Your purchase expense. Increases debit record. How much is that? $9,000. And you are purchasing these items on credit. In this question I have given, you are purchasing these items on credit. So your liability is increasing. Liability increases, it's a credit record. Which liability? Your trade payable liability. From how much it is increasing? From $9,000. So 9,000 is the amount that I will have to settle for my supplier. Now I am going to make the settlement for the supplier. When I am going to make the settlement for my supplier, what my supplier is doing, he is giving me a further cash discount of 5%. That supplier is giving me a further cash discount of 5%. So 9,000 is the amount that I should pay to my supplier. From that, my supplier is giving me another 5% cash discount. So how much is the reduction? He is giving me $450 reduction, which is 9,000 into 5% reduction. So here how much is the cash payment that I am going to make? 8,550. I will pay only 8,550 cash. So my asset is going to decrease. Asset decreases, it's a credit record. Which asset? Cash asset will get decreased by how much? 8,550. So what you have to understand is 450 is the cash discount. It is the cash discount that I received. Cash discount received. So we learn cash discount received. We will consider that one as an income. So income increases. Income increases. It's a what record? It's a credit record. What is that income? Discount received. Discount received income. How much is that? $450. And debit record will be what you have to understand. I am going to settle my supplier, I am going to settle my trade payable, I am going to settle my creditor. So creditor is a liability to me. Liability decreases, it's going to be what? It's going to be a debit record. So that supplier gave me a discount, cash discount of 450. I gave him cash of 8,550. So in total 8,550 plus 450 discount I received, entire 9,000 payable will get settled. So my trade payable entire 9,000 will get settled. So if I am giving you a summary, there are two types of discounts. One is trade discount and there is something called cash discount. So when it's come to the trade discount, there are two things. One is discount received and other one is discount given. So when it's come to the trade discount, we learn from the list price or from the catalog price, we will be deducting the trade discount. After deducting, we will get a value. So that value only will be recorded in the accounts. Whatever the list price will not be recorded, whatever the trade discount will not be recorded in the accounts. When it's come to the cash discount, we learn two things. One is the discount received and one is the discount given. Cash discount given, or we will call it as discount allowed also in accounting. So whatever the cash discount received, what you have to understand, we will consider that one as an income. Whatever the cash discount given, we will consider that one as a expense. So cash discount is something which is connected with the credit purchases and sales. So whatever the cash discount received is something connected with credit purchases. Whatever the cash discount given is something connected with the credit sales. Why it is something connected with the credit? Because at the time of settlement of the supplier, or at the time of settlement that my customer is making to me, only we will give discount or we will receive discount. So this is a summary of the discount.
So I hope you got a very good understanding about what is cash discount, what is trade discount, what's the difference between these two, and how to account what are the journal entries for the discount. So if you like this video, don't forget to hit that like button and make sure to subscribe my channel to watch more videos. Please make sure to on the bell icon as well. Please make sure to post a comment so I can go through it and I can create more videos as your request. Then let's meet again with my next video.